I'd just like to ask a quick question to the entire panel. There's been a lot of discussion here today about seeking to have a single tax level for all business income. Do you all agree that that should be an objective of our efforts to reform the tax code? Anybody who disagrees with that objective?
Maybe I could make one comment about it. I certainly agree. I agree with the objective, but the pathway that's opened once we agree on that is what is that single level of tax going to be? And the real choice, the fundamental choice that the committee has to think about is: are we going to have are we going to try and tax investors on the income that they earn through companies at the same rate they would earn on other income? That's one single tax. That's a graduated tax. Or are we going to have a separate tax on entities that may be unrelated to what the individual taxes are? So I think buried in the consensus on a single level of tax, you may find some disagreement about what that means. Are we going to have a unique level of tax for all corporate income, or is that going to be somehow related to what the individual investor's income is?
And what would your thoughts on that be? How should that be structured?
My own thoughts on it are related to what I think would be most distributionally fair and what I think would be the simplest in the end, which is to reduce distortions of the tax system so that people will not use the tax system to try and organize their affairs differently than they otherwise would. So that I would start with the view that however you earn your investment income, whether it's through a pass-through, through a sole proprietorship, or through a company, in the end, the same tax rate should apply. If we don't do that, people are going to have all sorts of pressures to play all sorts of games, to hire Dana Trier.
I'll come out of retirement.
To do all sorts of things for them.
And it should be taxed only once.
Absolutely.
What are you saying then, and I invite others on the panel to jump in here, what about the distinction between capital gains income versus ordinary income? Should those kinds of distinctions be maintained?
Well, I think you need to maintain that distinction, Senator, because we have this thing in this country called inflation. And if we had a dollar in the late 1960s, when the country still had its currency pegged to gold, the asset was worth in dollars terms what it was constantly worth in dollars terms. Since we've had this constant inflation of not only the U.S. dollar but fiat money throughout the world, the asset might not have had any change in its character or in its value whatsoever. It's the fact that the currency has had a big change in its value. And so what's pernicious about capital gains taxation is that one may not have had any accession to wealth whatsoever, which is what the income tax in theory is supposed to capture, but one may have a difference in the value of U.S. dollars of one's asset, not because the asset has changed in value, but because the U.S. dollar, the measuring scale, has changed in its value. And one of the most important reasons to have a lower capital gains rate is because it is not indexed for inflation. So if an asset was purchased in 1970 and $1970, sold in year 2012, in year 2012 dollars, it may not have appreciated in any way whatsoever. It may be that it's just worth more dollars because the value of the dollar has gone down over that 40-year period. And so one very important reason why the capital gains rate must be lower than the ordinary income rate is that it must be lower unless you're going to index for inflation the tax basis of assets. And without that indexation for inflation of the tax basis of assets, a lower rate is quite essential, because otherwise you're just taxing people for doing a transaction. You're not taxing their accession to wealth.
Anybody else want to weigh in on that? Yes.
Just two comments. First of all, we've got capital gains assets, some of which are shares of corporate stock. Part of the reason historically for the concession on the rates on capital gains for shares of corporate stock is the double tax system. So if you moved away from the double tax system, then you might want to rethink that particular result. Secondly, if inflation, and inflation is obviously a problem, if inflation is the rationale for the benefit of a lower rate for capital gains, then you might want to rethink what the requirements are to get the lower rate. If inflation is really the problem, probably you don't need to have the lower rate after investment of 6 months or a year. Maybe the benefit should depend on how long you've held the asset, which is we've had in the past in our system. So whatever the rationale is for preferential treatment for capital gains, should think about how that matches up with the actual requirements to get the lower rate today.
Mr. Trier?
I don't know if you have much time, but let me sort of add to his point. I was going to make his point that if we're not perfect in our integration system, the capital gains rate is having the effect of mitigating the second level of tax and therefore decreasing distortions. And if you look at a rough justice guy like myself, one of the places I start is I actually like our current in an imperfect world, I like having the 15 and I could live with 20, probably you could not live with 20, but percent rate on the dividends and a similar rate on the corporation. That's sort of a rough modified integration. So the other point I would make is that as I've come to think about it, this is a long story because I've thought about the capital gains quite a bit. I emphasize in my own thinking a third concept, and that is of, what you were a student of capital gains, but the concept of lock-in. To me, one of the basic reasons for that capital gains preference, wherever we set it, I might set it at a higher level of rate than you would, but I know that moving from one asset to another in an efficient way is deterred if there's a full 40% tax on the appreciation, and therefore, at some level, I still believe there's a reason for a capital gains preference to ease that movement from one business asset to another. I don't know if you.
Yes, thank you. My time has expired, but I appreciate those answers. It's very helpful.
Thank you, Senator Wyden.